The Rebel Capitalist Show.
Let's go through for the viewer and the listener kind of what your ideas are from a standpoint of portfolio construction. Let's get down into the nitty gritty on what people can actually do to prepare if we go into this inflationary environment where we get the steepening, the long end is going up, they're not pegging the curve, but we get tons and tons of fiscal. So, I mean, we just pretty much go down the line. We could talk about, your opinion on housing. We touched on that briefly. Bitcoin, gold, commodities, stocks, bonds.
Okay. I'm a famous no coiner. So the Bitcoin, I'm not a big fan. I'm actually even worse than a no coiner, George. I actually, I had a kid that was working beside me. I can't remember when it was. And he told me about this thing called Bitcoin. And he explained it all to me. And he said, I said, how much does it cost? He says, it's like $5. And I said, that's the stupidest thing I've ever heard. Don't ever bring that up again. And then, he comes out, a month later, 2 months later, he says, that thing you told me was the stupidest thing you ever heard? It's $50. And to my credit, I said, well, if it's 50, it could be 500, it could be 5,000, although I never guessed it'd be 50,000. And I said, I can't bring myself to buy this thing, but, the bits in the sky, but, tell me about mining. So we actually became miners, like way back when, like literally we were mining at like $100. Like we were buying these butterfly machines from China. It made our office so hot we had to put it in our garage up here in Canada. It was hilarious. And we actually created like this arbitrage between exchanges. And so everyone assumes that I'm a no coiner and that I don't know what I'm talking about. And it's like, no, I'm a no coiner that's just an idiot. But I just can't bring myself to buy bits in the sky. So we'll just skip that one. Maybe it's just my stupidity for not buying. I'll never forgive myself.
We talked about housing. And one thing that I've been saying on my channel is because prices are so high in the United States, and it doesn't mean they're not going higher, I've almost kind of changed my thinking to see the property as the liability on your balance sheet. But if you can secure that property, especially if it's a rental producing positive cash flow, with 30-year fixed rate debt, the debt is almost the asset.
I completely agree with you. If you think about it, if my scenario comes to play and we do get inflation, then you want to be, like the past 40 years has been, creditors have won over debtors. You've wanted to own bonds, right? Like that's the person with the asset has done well. I think that in the other way, if we get a situation where we get inflation, then it'll be debtors will win over creditors.
Right.
And therefore, you want to be issuing as much debt and buying whatever assets that you can. And I agree that property is one way to look at. I personally think that one of the things about, everyone thinks that housing has gone so up much in the States. I think that a lot of the housing that's gone up has actually been the 1%er. Like it's the gateway cities, it's the coasts, it's the LA's, San Francisco's, New York's, Miami's, right? Like all those housing has exploded. But if I think when you go to the heartland and you go to Atlanta and stuff, I don't think there's been quite the rise in rate. I mean, in property values. And so to me, I look at it and I think to myself, if I was somebody that was looking at this from a long-term basis, I would be buying kind of middle of America housing. And I would, as you say, I would borrow as long as I could and lock it in.
Okay, cool. So how about gold and commodities?
So commodities and gold, gold has suffered over the last little while because of the backup in bonds.
Yeah, it seems like everyone's forgot about gold.
Yeah, well, and the other thing is that I do believe the bits in the sky has really attracted a lot of attention. Yeah, but all you have to do is look at, like somebody like Raoul Paul, the founder of Real Vision. I thought he was insane. Like it was 4 months ago, he said, I'm selling all my gold and I'm buying, Bitcoin. And I, hats off to him. It was a ballsy call. Like it was to get out there and say this and to do it, I'm a trader. I appreciate a great trade. It was a terrific trade. But when you think about it, there has to be a lot of people like him that would have previously owned gold that now own the bits in the sky. So I think that gold has suffered from the popularity of Bitcoin.
Okay.
And all you have to do, I think I did one of my pieces I wrote about, if you look at the correlation between Bitcoin and gold, it had previously been positive and almost approaching 1, and it has now become completely uncorrelated, and it might even be on its way to being negatively correlated, meaning that as Bitcoin goes up, gold goes down.
Right.
So I think gold suffered from the bits in the sky. I think gold has also suffered in that nominal rates have been going up. And I know that gold should follow real rates, meaning the rate after inflation. And if you go look at TIPS yields, and that's the way you can basically, TIPS yield is the yield you get after inflation. So you pick up this rate and then you look at, you get inflation on top of that. TIPS yields up until 2 weeks ago had gone sideways, and yet gold kept going down. So the relationship that previously very stable relationship between gold and, let's say, 5-year TIP yields had broken down ever since August of last year when gold had its high. And I would argue that was a function of Bitcoin, and then maybe just like too many people long gold. Having said that, I think that when I'm putting on my trading hat and I'm thinking about last Thursday when the bond market had its little hissy fit, to me that looked like a kind of a washout day. It looked like something that you could be buying. I've been long steepeners and short bonds, and I actually covered a lot of those, and I bought more gold on that day, even though it seems like it seems like when everyone's accepting that rates going higher and that you get this sell off in the bonds, the last thing you want to be doing is buying gold. But I have this maxim that trading is hard, and it's almost like the hard trade is the right trade. And to me, gold feels like it could go up. But listen, it's been hated. I completely get it. It might be that it's still a little ways away from going up, but ultimately, I think gold saves you, and it'll be interesting to see what happens if Bitcoin ever has a correction. What happens to gold?
Yeah.
And anyway, so that's gold. In terms of commodities, I also believe in commodities. I've been a huge bull on copper. I look at all this. I have this line that you should, during the gold rush, it wasn't the guys panning for gold that made all the money. It was the guys selling the picks and shovels.
Right.
And when I look at the electric vehicle rush, I have no desire to go try to buy NIO or, Tesla or all these things and pay these dumb prices. I think you'd be much better off owning the things that they need. And so I think you can own any of the kind of commodities that are going in there. And I think the easiest one that makes you feel good is just kind of copper. If the world goes a lot more electric, we're going to need tons and tons more copper. So I've owned copper for the longest time. I did recently pitch it, but again, that's just a trading point of view. If I'm thinking about how I'm setting up my portfolio for the long term, copper is definitely, a big part of it.
Okay.
But the main one is this is kind of when I think about how I differ from most other people. I don't believe you should own any bonds. I think bonds have traditionally been a ballast in your portfolio, kind of the risk parity model where they, stocks go down, bonds go up. I think that instead of being a ballast, it's going to turn into an anchor. I think it could drag your portfolio down. And one of the things that I think that you should have a part of is actually inflation break-evens. These are a little tougher to kind of put into play, but in essence, if you go long tips and short the nominal bond, what you have is the market's expectations of inflation over the life of that bond. So you're in essence long inflation. And to me, that's a much better asset to own, because if you one of the things that worries me is if we do get a bunch of inflation and rates start going up, you could have a situation where both bonds and stocks are going down.
Right.
And there's very few things that'll do well in inflation. You hope gold will, but let's face it, gold is a second derivative of inflation. It has actually more to do with the real rate than it does actually inflation. And so to get pure inflation exposure, to me, this seems like the best way.